Hello and welcome to the Worldwide Markets Daily Forex Wrap-Up. It is April 8th, 2013. We're going to start with the Euro as usual. It was a crazy week last week and things seem to have calmed down a little bit, not only with the Euro but with the rest of the market as a whole. Currently the Euro is at pretty much 1.30 the figure. And we are waiting to see what happens. We got a boost from some stability last week that looked like Cyprus was going to obviously stay in the European Union, and some of the gloom and doom sentiment as far as a complete meltdown of everything seems to have subsided, and we saw some European strength. So right now what we want to see over the next couple of weeks is pretty much what's going to happen with some of the monetary policies and the Fed QE. So, that's going to pretty much determine, where this is going to go. We have some levels here on the chart that we're looking at. Right now we're, as long as we continue to stay above this 29.75 level, we could expect targets of 31.15 at this 38.2% retracement. If we kind of continue to trail back and we do break below this 29.72, I will expect us to kind of come back into this range of 27.50 to 28.50, and until it gets a push one way or the other with some fundamental changes that are going to be taking place over the next couple of weeks. It should trail off sideways if it does break back into this range, and then once an outside stimulus comes in, it'll push it one way or the other out of the range. I personally think we're going to continue to see this kind of choppy downward move. Barring the recent activities with Cyprus, I think it would have continued to follow in that pattern. We'll back this chart out a little bit, and 26.40 here is where we saw things back in November, or 26.60, I'm sorry, and we could definitely be on our way back there again. So definitely keep your eyes open with what's going on in the news in regards to the Euro, and we should see a lot more develop in the next couple of weeks. We'll move on to gold. Gold also, kind of got knocked around a little bit with the recent things that happened in Cyprus and with the Euro, and had a brief resurgence when things were very unsure over there, and then as soon as the consumer confidence kind of came back with the Euro, we saw gold pretty much just fall off the table. We saw this area here in the 1600s. And then as soon as everything kind of settled, it just fell. A lot of profit taking, and price drops to 1540. And if we take a look back, this seems to be the level. This 1525 level seems to be that level that gold just doesn't want to break through. Anytime it approaches this, you're getting some sharp snapbacks. Same thing happened here. We got all the way down into the 1530s, and then the buyers came back in. People have been looking for entries to buy gold for a while. Ever since prices started surging, a lot of people think it's overpriced, and any kind of dips, people are looking to buy. So definitely keep your eyes open on this 1525 level. I think that if we do see a dip below that, you could get a very large run. Just because we haven't been underneath 1525 in 2 years. So in the meantime, if you do see it build some support around this level and you see it start to go up, maybe an opportunity to buy and see where it goes, and see run it back up to 1600 before it comes back down. But I don't think that we're gonna, unless barring catastrophe, I don't think that we're gonna see $1,800–$1,900 gold at least this year. We're at we're in this range between 1525 and 1800, and I definitely think we'll break out of the bottom side of it at 1525 before we break above 1800. We'll move on to the Aussie, which is somewhat related to gold. We have a clear double top here at 104.95 with a midpoint at 103.83. And you know, we've flirted with getting below it a few times. We haven't seen that strong move. We're sitting right here again, and you know, every time it kind of pops back up, it's making lower highs. So you know, I would definitely, you know, I'm definitely looking with weaker gold and this technical pattern setup. You know, I'm definitely enjoying the opportunity to short here. You know, with a relatively, you know, tight stop loss over, you know, at 104.25, 104.30. You know, you should be looking at a 100 pip move back down into the 102.80 range. You know, so keep your eyes on that and see where we go over the next few days with the Aussie dollar. We'll move quickly into the yen. You know, we had a pullback couple, you know, last week. And you know, as soon as BOJ came in and pretty much said that was going to be no more, and they were going to try to weaken the yen again, you know, it's shot back up. We gapped open, and you know, we're now at 98.92. You know, it seems to be the overall market consensus is the BOJ wants to push this to 100. You know, so if they're going to try to do that, let them. You know, I mean, take the ride, see if you can ride it up to 100 and make your pips. And the same goes for euro yen. You know, you're getting surges in the euro yen. You know, you definitely have some movement to the upside, and the same as the pound yen. You know, pound yen just broke through the 23.6% retracement level, and you know, your next target, I mean, it's a long ways away because this is a pound yen weekly chart. You know, so if you're an intraday trader, you know, take this with a grain of salt. But you know, if you keep getting yen weakness, you know, our 38.2% retracements at 169. That's obviously a long way away, and it's not going to get there tomorrow. But you know, those are a couple levels that you wanna look for. But right now, it seems like the BOJ is determined to keep the yen weak, and that will definitely affect all the other currency pairs that are trading against it. So that is all we have for today. Good luck with your trading. Enjoy your day, and we will talk to you tomorrow.